Good morning, everyone. Welcome to the future of JobKeeper and JobSeeker, or JobKeeper 2.0, as I think the media has been calling it. My name's Paul Cunningham from Smart Business Solutions. I'm an associate here. I'll be managing the webinar questions and being the moderator today. So if you do have any questions, please put them into the Q&A box. There is a chat function as well, but if they're in the Q&A, that makes it easy for me to manage and make sure I don't miss any of your questions. I'll answer a few as we go, but also save some for the end for Shannon and I to discuss at the end. So as many of you will now be aware that we've been doing this for quite a while now during COVID lockdowns, and our aim is to get the information out there to help businesses, to help our clients and businesses on the peninsula to navigate through these times. Our founder, Shannon Smith, will be your presenter today and will help you through understanding the JobKeeper 2.0. Thanks, Shannon.
All right. Thanks, everyone. Well, I feel like we're back on that, I guess, hopefully that the wheel of progression and not spinning around as we're all back in lockdown at the moment. I want to go through the announcements of what's happened with the future of JobKeeper. Now, just to note at this point, it's not legislation, but we'll go through the future of JobKeeper, moving from, I guess, what we call version 1 to version 2. Some of the other stimulus measures, some of those will be relevant for small business, others may not be relevant for small business, but we'll just touch on some of those. And then just looking at some business rebound and refocus and what you can do now that we're hopefully coming out of this lockdown, or who knows at the moment with the daily count that we keep seeing at the moment. So a bit of background of what's happened in just the last, I guess the last week. July 16 JobTrainer package announced, so I'll go through a bit of that. 19th of July, we had the extension of the SME loan guarantee scheme announced. 21st of July, we've now had the JobKeeper announce changes to the coronavirus supplement and also the JobSeeker, and then the economic update regarding the extension of deadline of the early release of super has been announced. So I'll cover each of those areas, but the bulk of it we will be covering the JobKeeper, because obviously that's something that's very important for a lot of small businesses. One thing that I have to stress is these are just announcements. The legislation has not been released or passed yet. However, given that we have gone through the JobKeeper, we do have expectations of what we're going to be seeing in the legislation this time round, and we won't have the situation, ideally, what we've had last time, where we had things changing 3-4 times in a week. 1 minute you'd hear us saying one thing, the next minute we'd be correcting and saying, well, actually they've changed their mind. So hopefully we're going to get a lot more clarity on it, and what you can do. I want to go through today what you can do now in preparing for it to make sure that you can hit the ground running if you are eligible for version 2. So some planning and assessments can still be done. Looking at your JobKeeper eligibility, your June 2020 quarter turnover figures compared with your June 2019 quarter turnover figures, and then also looking at your average hours worked in February 2020. So I'll go through a bit more on those areas now. So what is JobKeeper version 2? So the initial JobKeeper scheme runs from the 30th of March to the 27th of September. So it's 13 separate JobKeeper fortnights, and as you're aware, we're getting the payment rate of $1,500 per fortnight. The new scheme will be introduced until 28th of March 2021. So really we're going to have JobKeeper in theory for 12 months. But the second scheme, or version 2, is actually going to have 2 phases. We're going to have one phase that's going to take us through to approximately the end of the year, and then the second phase will take us through the first quarter of next year. There are going to be reduced payment rates, and there's going to be 2 tiers of payments. And there also is going to be an additional decline in turnover tests. So I'll go through each of those now so that you can start to have a look at how this might be able to apply for your business. We will get this video up, but also these slides will be up so that you can walk yourself through them as well to look at your business. So the entity will need to meet the existing eligibility rules. Now, this is really, really important for those entities that maybe haven't actually been eligible for JobKeeper yet. If you are eligible before the end of September, you then will be eligible for version 2.0. If you are not, then you're unlikely to qualify for any extension of the JobKeeper version 2. At the moment, we haven't seen the legislation, but everything that has been communicated is that you need to be in JobKeeper 1 for it to be eligible for JobKeeper 2. The Treasury has stated, though, they will keep JobKeeper open for new recipients. So basically any company that is eligible between even still now and 27th of September can be made eligible for JobKeeper 1. They will get their JobKeeper payment depending on the month that they become eligible, and then they will be eligible for JobKeeper 2. And we've seen some companies that haven't been eligible yet for JobKeeper, basically because of the flow-on effect, I guess, of customers or orders still coming through. They may then be eligible later and then get the eligibility for number 2 as well. And JobKeeper payments will continue to be paid in arrears. So you will be paying for the JobKeeper payments as you are now, and then getting reimbursed after that. So the existing turnover reduction test, so you need to pass the test for at least one of the following. Now, this was the existing test. It was either your March through to September on a monthly basis, or it was your quarterly test, which was your June quarter or September quarter. The projected GST turnover for the 2020 period was compared to the current GST turnover for the corresponding 2019 period. And you can qualify for JobKeeper payments from the first JobKeeper fortnight and go from that stage right through to, I guess, the end of September, the 27th of September. So that's the existing turnover reduction test that many of you will be familiar, highlighting that is based on projected GST turnover. So you might recall, some of you, when we looked on a month-by-month basis, you may not have dropped yet, but we estimated for the June quarter or for the upcoming months, and that was based on projected GST turnover. The new turnover tests are going to be focused on actual GST turnover. So I guess you could nearly say that whole discussion we also had about should I do it on cash, should I do it on accruals, it's all going to come down to what are you actually lodging in your BAS. And this is going to be very easy for the ATO to also statistically match whether you are actually satisfying the requirements from the threshold of the reduction. We have seen through some of the accounting groups we're involved in that letters are starting to flow through to accountants with questions with the June BAS potentially being not 30% below the prior year for those that are currently on JobKeeper, and please explain as to why you thought you were eligible for JobKeeper. So with this one for the going forward, it is going to be based on actual. And what you're going to be looking at to qualify for the first phase of JobKeeper Part 2, which is basically takes you through to the end of the year or 3rd of January, you must have a 30% reduction in your June 2020 quarter and September 2020 quarter to be eligible for JobKeeper. So it is the June 2020 and the September 2020 when compared to the prior year BASs that you've lodged. So that's going to be quite easy for you to look up, grab your BAS from the June quarter for both periods and check those. To qualify then, and you are going to have to re-qualify, you are going to qualify from post January 3rd. You're going to need to also be down not only on your June quarter, your September quarter, but also your December quarter. So the focus on the JobKeeper is to keep the payments coming to those that are continuing to feel the impact of what has gone on with the coronavirus. So Treasury guidance suggests that the entity needs to pass the test for each of the relevant quarters. It's not sufficient to just show a combined reduction. So you can't just accumulate and do 6 months worth from your June quarter to your September quarter, which I do find that there are going to be some clients that are going to potentially fall out of this, which is not intended, where, you know, when we opened back up again, some people did have quite strong Junes, and then now we've been closed back down again. And so that potentially might bump them up. The ATO will have discretion to set out alternative tests, like what we had in the last situation. We had alternative tests available where it's not appropriate to compare the actual turnover for the quarter in 2020 with the corresponding in 2019. We do expect the alternative tests will be fairly similar to the tests that were in JobKeeper 1. However, there will be a focus on the actual. It won't be on the projection as well. So there may be some flexibility. So just to give you a bit of an example, we've got ABC Proprietary Limited. We're assessing the JobKeeper eligibility for the first phase of Part 2. It's already qualified for the existing JobKeeper rules. And just to ensure everyone is fully aware, there is no change to the existing JobKeeper if you're in now on JobKeeper version 1 through to 27th September, even if your income has increased and you haven't got the 30% drop anymore, you're still in. Once you're in, you're in. So that will continue. There's been no change to that. But in this situation with ABC, if it's GST turnover has fallen by, say, 40% in the June quarter and 25% in the September quarter, and then 33% for the 6 months from April to September, can they access the JobKeeper extension? Unfortunately, no. It's not something you can look at for 6 months. You need to look at, did they satisfy the June quarter? Yes, they did, but they didn't satisfy the September quarter, and therefore they're not eligible for JobKeeper version 2. Now, again, there may be alternative tests, but these are under the standard test that will be available, and we don't have the alternative test. So what needs to happen now, some of you may have learned a lot about tax law going through JobKeeper, but what needs to happen now, this has been announced. There will be legislation put in place basically by Treasury, and then Treasury, in a sense, give that to the ATO to then administer. As part of this, the Treasury have said they will give the ATO discretion in how they administer some of the alternative tests. So that's the process that still needs to come through. The actual GST turnover will be used to determine the eligibility rather than the projected, and this is really important. So it's really going to be focused on, well, what was it you actually have lodged? I know we've had some clients that have gone back to make sure that what's been lodged is accurate as well. So if you need any help, do let us know. And it will be based on the details reported into the BAS. So it's really going to be quite easy for the ATO to see those variances. There will be special arrangements put in place for those entities that don't need to lodge a BAS. There will be some entities that are either under the threshold or lodge, say, an annual BAS. So what we don't know, though, is whether there'll be actually any flexibility in calculating the methods, but that'll come down to the alternate tests when they do come out. Now, the turnover reduction thresholds, these do remain unchanged. So for most of you on this call, it'll be the 30% reduction in your turnover for that period of time. So some of the timing issues, businesses will need to assess the eligibility for JobKeeper before the BAS due date to ensure that they meet the wage conditions. So the deadline for your September BAS is in late October. So what we're going to really suggest is, and those I guess that are on zero, you can do it very quickly, but come 1st of October, the first thing you're going to do in the morning when you get up is reconcile your accounting so that you can have a look at where your September BAS is to make sure that in October, so if you are eligible, because you've already assessed that in June you've dropped, and if you are eligible for the September, you have dropped, and you're eligible for this first phase of JobKeeper version 2, then you're going to want to make sure that you're paying the right amount of wages in October. You can't wait till nearly the end of October when your BAS is actually due, because you would have missed one of the fortnights. And what we don't know at this point is whether there's going to be any extension given. If the ATO will use that extension, give extension of time to be paid, like they did in the first JobKeeper, where you had additional time to actually pay the employees and make sure that you had that wage condition met. So we don't know. Those of you that can reconcile your accounting quite quickly, get your September BAS numbers firmed up, will be able to do that before the end of the fortnight in October, so that you can make sure you get your payments to your employees and satisfy that requirement. So failing the additional test, so it won't impact the JobKeeper up till the 27th of September, but you still need to check that you are meeting your ongoing requirements to access the JobKeeper payments. Make sure you're lodging your monthly reports. Make sure that your employees are still eligible. We have seen a few where employees have changed their situations. And, some people have still claimed JobKeeper for an employee that's since left the organisation, and that type of information will then flow through to the ATO. So what you still need to do, even if you fail these additional tests, still make sure that you've got things correct for the current JobKeeper that you've got in place at the moment. So now just another example then on assessing the eligibility for JobKeeper. For the second phase, they've already qualified, so XYZ Trust, already qualified for existing JobKeeper rules. JobKeeper GST turnover has fallen by 50% in June quarter, 37% in September quarter, and 28% in the December quarter. So they had satisfied for the first phase, the existing JobKeeper, they satisfied for the first phase through to basically the 3rd of January. But because their December quarter is not 30% down, they won't qualify for the last part of the JobKeeper going from 3rd of January through to March on that one. So on the eligible employees, there are no changes for the eligibility rules on employees on whether they're eligible to receive JobKeeper. You need to have met the number of specific conditions as at 1st of March, so this hasn't changed. And again, only one employer can claim the JobKeeper payments in relation to a particular employee. So that part hasn't changed. What we do have is lower payment rates. So making sure that you are adjusting, especially those that are stood down, making sure you are adjusting to the lower payment rates. So the payment rates will be reduced and split into 2 tiers. The rate for employees will depend on whether they worked in the business for at least 20 hours a week on average in the 4 weeks before 1st of March. So we do all know that there was a bit of a windfall for those part-time and casual workers who were literally only working maybe 3 or 4 hours a week, and all of a sudden they got a nice big pay increase. This has been modified now, so they're getting a pay reduction, I guess you could say, but they weren't working those hours before. So it is important to have a look at what were the hours that they worked, and if they worked at least 20 hours a week on average in the 4 weeks before 1st of March 2020. Now the rate for eligible business participants, so those of you that are not employees but an eligible business participant, will depend on whether you're actively engaged in the business for at least 20 hours per week on average in the 4 weeks before 1st of March 2020. Now, I know for most business owners, that would not be hard to achieve. Many of us are turned on 24/7 actually with the small business. So, and I'm not sure what or how the ATO will actually be looking at checking that, because none of us as business owners are sitting there. Generally speaking, if you're not on wages, you're not sitting there actually recording all the hours you spend on your business. You probably don't want to know how many hours a week you spend on your business. So we're not sure how they're going to check that. But it may just go without saying that you have to be actively engaged in the business. So the payment rates from the 30th of September to 27th of September, obviously at the moment you get $1,500 per fortnight regardless of the number of hours worked. From the 28th of September to the 3rd of January, so this is JobKeeper version 2, phase 1, the higher payment rate is $1,200 per fortnight. And that's going to apply for all of your employees that work more than 20 hours a week. So your full-timers and then those that work more than 20 hours a week. The lower payment rate is $750 per fortnight. And that is for all your employees that work less than 20 hours on average a week. And they will get $750 per fortnight. From 4th of January, so second phase of JobKeeper 2, from 4th of January, the higher payment rate will then be further reduced to $1,000 and the lower payment rate to $650. So the government's really trying to, I guess, ease us out. And this is on the expectation that hopefully we get on top of the virus and what's happening out there. So it's easing that through. So coming back to that question, how do we determine the hours worked? Now, I guess this is something they could have brought in the first JobKeeper version, but I'm sure it would have been a bit of a struggle to try and work it out. They opted for the option of just saying, well, we'll just put everyone at the same rate. So what the ATO will have discretion to set out alternative tests when someone's hours are not usual during the month of February. So what we're looking at is how many hours on average did the person work prior to 1st of March, for the 4 weeks prior to 1st of March? And was that at least 20 hours? So if it's at least 20 hours, they're eligible for the full rate. If it's less than 20 hours, then they get the lower rate. If there were some situations where someone was on leave, volunteering, or was not employed for the full month, there will be some alternative tests. We don't know what those tests are, but I'm hoping that it'll just be common sense on working out on averaging those. And so they'll also give guidance. They're expecting the ATO to give guidance for those where employees are paid on a non-weekly or non-fortnightly pay period. Again, you would hope that common sense will prevail with trying to work out how many hours people have worked during that period of time. So eligible business participants, so they currently need to be actively engaged in the business to access the JobKeeper payments. It's actually not a defined term and very little ATO guidance at this point. And the new rules will require hours of active engagement in February 2020 to be quantified. How that's going to be done, I don't know how they're going to do that. And I think that, I actually don't expect that they will be out there reviewing how that's actually done, because the average business owner spends a lot of time in their business. Even those business owners that are shut down at the moment, I know a lot of business owners in those cases are actually spending time, whether it be doing social media, business planning, looking at what's next. So I think that I would be quite comfortable in that most business owners, or nearly everyone, would be able to justify that they are actually actively engaged in their business, even during a shutdown phase at this stage. Some of the other key points, an entity only needs to pass the turnover reduction test once to qualify for the existing JobKeeper rules. So that was, you might recall at the beginning, they said that you're going to have to requalify each month. Then they actually changed that and said, no, once you're in, you're in. And that'll continue up to the 27th of September, even if your turnover picks up. So we have had some clients a little bit concerned. They've gone to do their June BAS and, lucky them, they've innovated, they've pivoted, and, their turnover has actually gone up, but that wasn't the expectations. We've put together the documents in advance, as we discussed in our first webinars, on making sure you had full support for how you estimated your GST turnover. Obviously, the new ones are being focused on the actual GST turnover. So don't panic, as long as you've got support, and it's great that businesses have been able to pivot and they haven't had such a financial hit as they expected to do, as they expected. So that's, don't panic if that happens. Just make sure you've got the information for how you estimated what your turnover was going to be, so that if you do get the question, and you may get that automatic question, now all the June BASs are being lodged, you may get that automatic question coming through. Probably will mean you're not eligible for the upcoming JobKeeper, but that could be a good thing if the business is picking back up again. Just be careful with some business sales and acquisitions, and then also any internal business restructures. We may just have to look at those just to make sure that none of those are actually causing any issues with your eligibility on JobKeeper as well. So just turning to some of the other aspects that have been announced as well, there is the coronavirus supplement, currently paid at $5.50 per fortnight until 24th of September. That's actually going to reduce to $2.50 per fortnight from 25th of September through to 31st of December. And that's currently, the eligibility is the same, even though the payment rate is going to be reduced. And this payment is not income tested. So those receiving JobSeeker, youth allowance, parenting payment, these other government benefits are receiving that, and it's not income tested, but it will be reduced and through till Christmas. Those on JobSeeker, there will be expanded access to JobSeeker and youth allowance JobSeeker. Well, it's going to continue to apply until December this year. But certain restrictions are going to be reintroduced, such as the asset tests and liquid asset tests, which is looking at how much cash so they've got in the bank, partner income testing. Job seeking requirements are going to be reintroduced from 9th of June, or were reintroduced from 9th of June. And then also certain waiting periods will still be waived until 31st of December. So there are some changes on those with the job seeker. I know some of you did have some frustration with employees in regards to JobKeeper and then JobSeeker, and employees not wanting to work and still get paid. We may see some changes on that because JobSeeker is not going to be as appealing as it was. And also there have been some, I don't know if many of you have seen the cases on JobKeeper, but there have been some successful Fair Work cases just in the last month, where employees refused to do any extra work because they said, I'm getting JobKeeper anyway, I just want to work my 3 hours a week and I'll take the full JobKeeper. And an employer on a number of occasions now has been successful in actually requesting that the person work additional hours up to the JobKeeper rate being paid. So that came through from the Fair Work Australia. Some guidance has come through on that one. So on the SME guarantee scheme, this is where the government was guaranteeing 50% of new loans issued by specific lenders to SMEs. The initial phase was running out 30th of September. And the maximum loan amount was $250,000 per borrower. The loans were up to 3 years, unsecured, with an initial 6-month repayment holiday. Now, actually, not many of those were really taken up as much as I guess a lot of us had expected. Reason for that I saw is the banks still had to apply, even though it was unsecured and the government was guaranteeing 50% of it, the banks still had to apply a lot of their standard criteria on making sure that the future of the business was sustainable. So I didn't see as many of these loans actually being taken up as I would have expected. They are looking at a second phase of these loans because it was a bit more restrictive under the first situation. The second phase will start on 1st of October. So this may be really interesting for those that are wanting to really help get your business going. What they are looking at, the second phase will have some basic features the same as the initial, but the modifications are going to be that the loans can be used for a broader range of purposes. The first round was actually a lot stricter. Maximum loan size has now been increased to $1 million per borrower, and they can be held for up to 5 years. And that's a really great thing to have the 5 years, because a lot of with the $250,000 and over 3 years, the serviceability requirement of a business was quite significant given the market that we're in at the moment. To have that loan over 5 years, this could be really an attractive option for any of you that are looking at any equipment purchases or major asset type purchases or need some of that working capital. Remembering that if you do buy a large piece of equipment, you can write off currently until December this year, up to $150,000 will be 100% written off. Now, the benefit of that is that you get a tax deduction today for $150,000, but you actually don't have to pay it off for, say, potentially 5 years. So you really do get a positive cash flow from that perspective in this financial year. So that's something to think about, that this may actually be a good option to, if you are looking at some borrowings, to look at it under this situation, because 50% of the security we've got, the government will secure 50% of it. You will be also having the repayment holidays will be at the discretion of the lender, but we do anticipate that you'll get at least the 6 months potentially available. So that's something to look at for those that need some funding. JobTrainer, additional 340,000 training places are going to be created with different courses that are going to be available. And the big thing is the number of businesses that can access the 50% apprentice wage subsidy is now being extended, and the subsidy is actually being extended. So have a look, if you do have apprentices, do have a look at those opportunities and see if that might be relevant for you. But one thing just to note, that whilst you do get the reimbursement of 50% of the eligible apprentices' wages, up to a maximum of $7,000 per quarter per apprentice, you can't claim the subsidy and the JobKeeper for the same employee. So I know with some of my clients, it's been better off for them to claim, say, the subsidy, or for some clients, it's been better off to claim the JobKeeper. So that's something to have a look at and see what's going to be the better situation for you on that one. And then looking at the early access to super. Now, I personally wasn't the biggest fan of this. I understand that some people do really need that money at this time. My concern is the ongoing impact of taking money out of your super at a time when it's at an absolute record low, and how are you going to build that up? Mainly because a lot of small business owners, I guess one of the traits of a lot of small business owners is that we don't often put as much into super that we probably should be, because we're focusing on reinvesting in the business. So that does give me a little concerns of what that's going to do. Ideally, if you do take the money out of super, if you can focus on building your business up, and then, starting to put and have a plan in place later to maybe, top up your super at a later point, because you're going to be thankful for that in a certain period of time when you get closer to retirement. So that they've actually not increased the $10,000. That's still capped. They've just basically extended the ability to get that access. So the access was originally till 24th of September. Some people got in on the 1st of July and got their money at that point. Now that has been extended till 31st of December. So maybe you're actually sitting on the fence at the moment. Do I access that $10,000 or do I not? You've now got till the end of December to actually decide on whether that's going to be good for you at this point. So some of the next steps that I'd recommend, so we are waiting for the legislation, but I don't think we're going to see the radical changes or anything out there that we saw in the first JobKeeper version. Obviously, when that comes out, we will definitely let you know. But what can you do now? Because I think that businesses, you do need to start planning as to either how you, wean yourself off the JobKeeper, because obviously it's been quite a nice supplement to really help you through this time. And it has been and we've had the cash boost. A lot of you will be seeing the second round of the cash boost coming through now. So whatever you had as your cash boost up to June 30 is now being paid in your integrated client account through your ATO portal. If you're on quarterly BASs, you'll see 2 lots coming through. If you're on monthly IASs, you'll see that coming through monthly. So what can I suggest you do now? Take a look at your June 2020 to your June 2019 as per your BAS. Have a look at your GST turnover and see if you have dropped 30%. If you have dropped 30%, you can say, okay, there's first base. We're then got to wait to second base, which is your September. But I would start tracking yourself each July and August to really start to see, because you can't get to end of September and potentially find out you're not eligible and then work out, well, how do I keep the business running? You need to be proactively looking forward as to how this is going to impact your business. Review your employee hours in February for those not full-time, so that you can understand who are those people that are going to be eligible for the lower rate if you are continuing versus the higher rate. And then reconcile ASAP on October 1st for your BAS, so that for your September BAS, so you can see if you're eligible. There is no point in waiting until you're ready to lodge your October BAS, say late in the month in October, and find you haven't paid your employees enough if they've been stood down in that first fortnight in October. And so you want to go back and then make sure that you're paying your employees the right amount in the first fortnight in October. So if you're wanting to get your BAS done really early, reconcile everything on the 1st of October so that we can get that sorted for you, so we can see whether you are still eligible for the JobKeeper going forward. I guess what I wanted to touch on a bit now is to really, we can't just wait till September and then say, oh, I'm in or I'm not in. You need to start really having a look at time for the business rebound or refocus. You know, have a look at where you're at now. Are you trading at a loss? Is that non-sustainable? If you need us to have a look or have a chat with you, sometimes I will have those hard discussions. I mean, there's no point if you are trading at a loss and it's not sustainable. There's, sometimes there's that hard discussion that needs to be had as to whether, we don't want you to keep putting more personal assets into a business if we're not going to see that return on the other side and getting more in debt from that perspective. We can always have a look at, say, the cash flow, but really trying to have a look at your operations of where you're at now proactively and not waiting till September. If you're trading at break even, obviously then maybe you've pivoted a bit on some of the way in which you're operating, and you're being able to try and see, well, how can we change that break even to positive, and what is break even going to look like when you don't have the JobKeeper anymore? How can we keep that going? And if you're trading well, then you've obviously done something great during this time, or you haven't been impacted to the extent that others have, but it's not a time to just then sit back on that as well. I'd say it really is a time now. There's going to be so much change coming through. So in the business now, and I look as accountants, this is our kind of busier time of the year. I'm not looking for the next 3 months. I'm actually looking at what's going to happen in December, what's going to happen in March, and what's going to happen in June. So I'm trying to look forward as to how things are going to be changing in my business, because obviously I'm a small business too, and how things are going to be changing in our clients' businesses for that future period. Now, if we can plan strong now for that future period and have that goal, then hopefully we can achieve that no matter what other external things are going to be thrown at us all. I mean, I'm looking at it every day at the amazing things that some businesses have done that have been just thrown, the worst situation with what's gone on with COVID. So I think that if we can keep focused on it and really understanding, where should you be spending your time and money at this point in being able to keep your businesses trading, but really know your numbers, because I really want to see September, for those that aren't eligible for the ongoing JobKeeper, let's see it as just a little bump, a little pothole, if you will, and not a falling off the cliff. So something to try and be proactive with that. I know many of us, you have seen we've kind of toned back on the webinars because I think many of us got really zoomed out or webinared out. We did a lot during the first lockdown. They are all up on our website, still a lot of really great content on how to business plan and look for the future. What we are looking at, those of you that do own investment properties and tenants, doing a focus one on landlords and tenants and managing your tax obligations. There's been a few changes over the last probably year, 2 years, and also even just over the last few months. So I'm just going to do, it's very more niche area, but if you are a landlord or a tenant, just to have a look at how to manage tax obligations, especially those around where we've had situations where, half your rent has been deferred. What do you do in those situations? Another one that the ATO continues to focus on is the contractor versus employee. What's the distinction and what's the risk to small business? Because quite frankly, it's actually a risk to the person employing that contractor. It's not a risk to the contractor. So how can a small business protect yourself? I will give you some good little cheat sheets and things like that I recommend all of our clients do when they're dealing with contractors so that you don't get burnt on the other side. More to come if you give us feedback of what you're wanting to hear. Happy to open it up now to questions.
Excellent, thanks. Oh, thanks, Shannon. Sorry, there's my video. We've got quite a few questions. So can you jump in and out? So if you don't qualify for September but then qualify December, can you come in later?
No. So you actually must qualify for June and September and December to then get to the last phase. Yeah, they've actually got, no, you can't jump in and out.
Can you add new staff to the JobKeeper for the new phase if you qualify?
No, the staff must, going back to the original eligibility rules, the employee eligibility is back to the original rules back from 1st of March. So no, they can't.
Do you work out the 30% decrease on an accrual or cash basis?
It actually comes down to, because it's on actual this time, not on projected, it's basically how you're lodging your BAS. So if your BAS is lodged on a cash basis, it'll be on the cash basis. And if it's lodged on an accrual, it'll be on the accrual. What we don't know is whether the ATO will come out and give some other additional guidance. But what we've been told by Treasury is it's based on how your BAS is lodged.
Yeah. How does the government-funded employer paid parental leave allowance work in terms of JobKeeper for an employee commencing maternity leave shortly?
That one, government-funded employer paid parental leave allowance in work for employee commencing on maternity leave. That one, I'd have to have a look into that and see. I believe that they could, under the original one, they could still get the JobKeeper even if they were then on leave and maternity leave. But that one, I'll have to look into that one and see if there's something in particular. I don't know the answer to that off the top of my head. And sorry, I had one in the chat as well. So the alternative tests for new businesses. So we've got a business that started in December 19. At this stage, we don't really have an idea of the alternative business tests, do we? But were they probably similar lines, I'm guessing? Yeah, we're expecting that the alternative test will be similar. So what we would have had, if you qualified on the alternative tests and it was based on your actual drop for maybe just say an actual drop for those maybe February, March, April or something along those lines, or an average for that period, we suspected that it will be the same test, only brought through till June. Will be that test period on the alternative tests, but it will be based on actual. It will not be based on any projections. So we believe it'll just be rolled forward through till June at this point.
Yep. If a business is no longer eligible after September, how do you opt out of JobKeeper from October onwards?
It will just stop. You're not opting in, so to speak.
You won't lodge your monthly declaration.
You won't lodge your monthly declaration. You're not eligible anymore, and it will just stop. Yeah, I'm not sure in Xero whether we have to actually go in and stop JobKeeper. That might be what the question, part of the question. So in Xero, if you have an employee leave, you can go in and stop JobKeeper. I'm assuming, I don't know whether at the end of September, whether Xero will come up with a pop-up box that says, do you want to continue for JobKeeper, or whether you just actually have to stop JobKeeper. So that as soon as we find out, we'll let you know. That might be something that has to be done in Xero, but you don't need to advise the ATO on that one.
Absolutely. And we just did have one question. So we can't combine the 2 quarters to show 30%. We has to be a drop in each quarter just to.
Yeah. Correct. Yeah.
Oh, we just had a new one coming up. So we pay the estimated GST on the BAS each quarter and do the annual reconciliation. Does this mean we have to change the actual quarter BAS for our June and September BAS? So you won't have to change, but you'll have to be able to calculate it, I imagine.
Yeah. That was one of there were going to be some there was going to be some additional guidance from the ATO for those that are not required to lodge that quarterly BAS. So I suspect that there will be something coming out as to how you've got to calculate that or show the actual for those periods.
Yeah. Okay, so I think that's all the questions answered, unless I have one pop up now. So thanks for that, Shannon. Hope everyone got a lot of benefit out of that.
Yeah, so great just to introduce the Smart Leadership team for those that haven't met us before, myself obviously, Paul Cunningham, who's been on here as well, and also Daniel McCulloch. But if you have any questions, feel free to reach out. Today's session was clearly a lot shorter than last time, which was great, I guess, given the JobKeeper at the beginning. But if you do have any questions, and as soon as we get an update of the legislation, and then once the legislation comes out, it usually will take a week or two for the ATO to give their interpretation of how they're going to implement the legislation. At least at this stage, we have time on our side because we basically do have until the end of September until this happens. But do keep on top of where is your business at, how is the budget going, having a look at your June quarter so that you're not getting to the end of September and having a surprise. So I would merely be budgeting for not receiving JobKeeper and having, trying to push the business on that side, but being prepared in a sense, I guess, preparing for, hope for the best and, prepare for the worst on the cash flow so that you don't have that surprise if you do fall just below that 30%, which we had a few clients in the first JobKeeper that were like 28%, 27%. We don't want to have that surprise for you. But thanks very much for joining. And if you do have any questions, please feel free to send us a message after today. Or do we have another? Oh, we have a thank you. Thank you. Thank you. Great. Thanks very much, everyone. Thank you.
Yeah.